Welcome back, my friends. The news today is that Salesforce shares plunged 16% on first revenue miss since 2006. Here are the key points. Salesforce's quarterly forecast fell short of expectations. Revenue grew 11% from a year earlier, missing estimates. Salesforce also trims full-year forecast for subscription and support revenue. Salesforce Inc. came up short with its quarterly revenue guidance, sending its shares sliding 13% in Wednesday's after-hours trading. The cloud software company reported fiscal first quarter net income of $153 billion or $158 a share, compared with $199 million or 20 cents a share in the year before period. After adjustments, Salesforce CRM earned $244 a share, while analysts tracked by FactSet were modeling $237 a share. Salesforce's revenue rose 11% to $913 billion, whereas the FactSet consensus called for $915 billion. In looking at the current quarter, Salesforce models $920 billion to $925 billion in revenue, as well as adjusted earnings per share of $234 to $236. That compares with a consensus view of $935 billion and $240 respectively. The company brought down its full-year forecast for subscription and support revenue. That now calls for slightly below 10% growth, or 10% growth on a currency-neutral basis. The prior view was for about 10% growth or slightly above 10% when adjusting for foreign exchange. Salesforce is keeping its overall full-year revenue outlook of $37.7 billion to $38.0 billion unchanged. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icons so that you are notified of upcoming videos when they are released. Salesforce shares plummeted as much as 17% in extended trading on Wednesday after the cloud software vendor reported weaker than expected revenue and issued guidance that trailed Wall Street's expectations. Here's how the company did, compared to the LSEG consensus. Earnings per share, $244 adjusted versus $238 expected. Revenue, $913 billion versus $917 billion expected. Salesforce called for adjusted earnings per share in the current quarter of $234 to $236 on $9.2 billion to $925 billion in revenue. Analysts surveyed by LSEG had expected $240 in adjusted earnings per share on $937 billion in revenue. Revenue in the fiscal first quarter, which ended April 30th, increased 11% from $825 billion a year earlier, Salesforce said in a statement. It is the first time since 2006 that Salesforce fell short on revenue, according to LSEG data. Salesforce saw budget scrutiny and longer deal cycles than usual during the quarter, President and Operating Chief Brian Millham told analysts on a conference call. Management implemented go-to-market changes that cut into bookings, Millham said. All 5 of Salesforce's product areas contributed to the growth, but revenue from the professional services and other category, at $548 million, was down 9% and under the street account consensus of $572.9 million. Net income jumped to $153 billion or $156 per share, from $199 million or 20 cents per share a year ago. Salesforce lifted its earnings forecast for the 2025 fiscal year. The company now expects adjusted earnings of $9.86 to $9.94 per share, compared to $9.68 to $9.76 3 months ago. Its revenue guidance remains at $37.7 billion to $38 billion. Analysts polled by LSEG were looking for $9.76 in adjusted earnings per share and $38.08 billion in revenue. Amy Weaver, Salesforce's finance chief, said she expects deal compression and slowing projects in the professional services business through the current fiscal year. During the quarter, Salesforce started selling its Einstein Copilot assistant sales and customer service representatives. The company also said all paid Slack customers were gaining access to artificial intelligence features, such as conversation summaries and daily recaps. The Wall Street Journal reported that Salesforce was in talks to buy data integration company Informatica. But weeks later, the newspaper said talks had collapsed. Weaver said Salesforce acquisitions would need a clear timeline to value accretion. Before the after-hours move, Salesforce shares were up 3.5% so far this year, trailing the S&P 500 index, which is up around 11% during the same period. A drop of this magnitude on Thursday would mark Salesforce's worst day on the market since the 2008 financial crisis. Salesforce's recent earnings report indeed surprised investors and led to a significant drop in its stock price. Here are the key reasons why it was considered a disaster. Revenue miss. Salesforce reported revenue of $913 billion for the first quarter of fiscal 2025, which was below market expectations. This was the first time the company missed revenue estimates since 2006. Weak guidance. The company's second quarter revenue forecast fell short of analysts' expectations. Salesforce projected revenue in the range of $920 billion to $925 billion, while the consensus estimate was around $935 billion. Additionally, the earnings per share, EPS forecast for Q2, was lower than expected at a maximum of $2.36, compared to the analyst estimate of $2.40. Market sentiment. There has been a general negativity towards software stocks, and Salesforce's results were closely scrutinized in this context. Investors were hoping for more upside, but the company's outlook disappointed them. Profitable growth trajectory. While CEO Mark Benioff emphasized a positive tone regarding the company's growth opportunities, the market focused on the missed forecasts. Benioff highlighted the massive opportunity for customers to connect with their own customers using AI, but the initial reaction was still one of disappointment. Slowing growth concerns. Salesforce faces the challenge of slowing growth. Although the company saw a 39% increase in cash flow, investors are concerned about whether it can sustain the sales growth they expect. The combination of a revenue miss, weak guidance, and market sentiment contributed to the perception that Salesforce's earnings were a disaster. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.